Hi, my name is Mark Walhout, and in this short video, I'm going to do an introduction to the things you need to be thinking about for tax season. So we're now past the end of February, which is sort of traditionally known as the RSP season, and now our sights are turned towards what we need to do to get ready for submitting our income taxes. So income tax returns and income tax owing for individuals is at the end of April. I think actually the date is May the 2nd this year is the deadline because April 30th falls on a weekend. But there's a number of things that you need to be thinking about when you're getting your documents ready for tax time. And what I thought I'd do today is just sort of walk through a high-level whiteboard on sort of the big things that you need to be focused on gathering up and getting ready for your tax preparer. And then a couple of things that I see trip people up that I'm constantly sort of raising again and again. And I thought maybe I'd just do this video to highlight those and help you maybe avoid some of these things that could get you into trouble when it comes to filing your taxes. So what I'm going to do is I'm going to share my whiteboard screen here and we can go through this together. So I think the big first thing that you need to think about gathering up when you're getting your taxes ready for this year is going to be your TSlips. Okay. So TSlips, think of them almost like receipts for different types of income that you receive throughout the year. So the most common type of TSlip that most people who are working and are employed, it's going to be a T4. Most people are familiar with the T4 slip. That's going to include the amount of income that you got, different types of income. So there's employment income, there's commission income. It'll indicate how much taxes were withheld and already paid to the government on your behalf, plus also the Canada pension plan that was collected and paid on your behalf, EI payments or premiums and things like that. Other types of T-slips that you might be getting might include things like T3 and T5 slips. If you have investments in non-registered accounts or you are a beneficiary of a trust, you might get T3 and T5 slips. And then if you're retired or if you're collecting income from a retirement income fund, from Canada pension plan, from old age security, from a private pension plan, you'll get what's called a T4, either T4 RIF if it's from a RIF or a T4A. So those are really the main types of T-slips that I see coming in from year to year. But really right now, you should be gathering up those slips. Most of them should be received by now. For clients of my firm, you should be receiving your T-slips in the mail already, or they're uploaded to your investment portal. And if you have questions about if you have all the slips you need, and if I haven't already reached out to you indicating what you're going to receive, then certainly let me know. And I'm happy to just confirm to you what you should get. And if you're missing a copy, you can always reach out to me and I can provide that to you. So T-slips is the first thing that you want to be watching out for to make sure that you're collecting all those things. The second thing that I'll highlight is what's called other investments. And there's types of income that you might receive from investments that may not necessarily generate for you a T-slip. And you could realize a capital gain or a capital loss on the sale of other property that's not an investment property. So let's think, for example, let's say you sold a rental property. You're not going to get a T-slip for the capital gain that you might realize on selling a rental property, but you still do need to gather and submit those details to your accountant and have those supporting details in the case the CRA ever comes and asks you for that information. I see this a lot with people who have foreign investments in foreign investment accounts, specifically for people that have stock options or RSU grants that they let mature and they keep them in their foreign investment accounts like Fidelity or with Schwab. Those American investment accounts are not going to generate for you Canadian tax receipts in most cases. So if you have stock in a US-based brokerage account that you sold at a capital gain, you need to record that those capital gains or capital losses and then report that on your Canadian tax return. And if you have questions about that, if that's your situation, I can show you. Most platforms have the ability to do like a mass export where you'll be able to see the details that you need so that you can complete your tax filing. But that would be another example of an other investment that might require you to do some tax reporting. So the next thing you want to gather up is going to be receipts for other deductions and tax credits. And here what we're thinking about is for people that have young children, childcare. So if you have children under the age of 7, I believe it still is, then there's a portion of your childcare expenses that can be deducted from your income taxes. Tuition receipts, or if one of your dependents or a child of yours is in school and they don't have the ability to claim credits for their tuition, you can gather up those receipts, and those can get tax credits for you. RSP contribution receipts. So if you made a contribution to your RSP in 2021 or in the first 2 months of this year, you can deduct those contributions from your income taxes. So you're going to want to gather up those receipts. So let's make sure that you've collected those items, that you have them ready to go for your tax preparer. The next thing that you want to make sure that you prepare and report to your tax preparer is details if you sold your primary residence. So sale of primary residence. So as of right now, there's no tax to be paid on the sale of a primary residence in Canada. There has been discussion about maybe that changing in the future. I don't see it changing in the future. But just because you don't have to pay taxes on the sale of your primary residence, you still do need to report if you have sold your primary residence on your income tax return. So you're going to want to gather information on the proceeds from that sale, a description of the property. The other thing that does trip people up from time to time is if you've changed the use of a primary residence to an income property. So let's say you own a home that you live in and you want to change either a portion or the entirety of it to a rental property. You need to report that on your income tax return. Even if it doesn't spin up any taxes for you today, you still need to collect that information and disclose it on your tax return. So that's something that I see people getting tripped up on from time to time. The other big thing that I see people getting tripped up on is foreign property. And I'm just going to grab my pen here, foreign property. So if you own stocks, foreign real estate, digital currency, potentially, if you're a member of a partnership or you own assets that are outside of Canada and they're over $100,000 your cost in Canadian dollars at any point during the year, you need to report that you own it as foreign property on your tax return. And I've seen people get tripped up on this, specifically people that own stocks in their employer that are based in a US-based brokerage account or even in a Canadian-based brokerage account. If it's property that's held in a non-registered account, in this case, it needs to be reported on your tax return. You just need to disclose to the CRA that you own it. And this doesn't, the reporting doesn't mean that you owe taxes. It just means that you have to disclose it. And I see a lot of people not avoid this, but maybe just sort of forget about it or they don't think about it. It's kind of on the first page of your tax return disclosures. Did you own property that's worth over $100,000 Canadian cost at any point during the year? And sometimes it'll just slip your mind. You're like, I don't own property in the United States. But if you own stocks in a brokerage account that are US based or foreign based, you do need to disclose that. So just make sure that you're not getting tripped up by that. And if you have questions about that, you can certainly just give me a call and say, hey, I've got this property. Does this matter for foreign property? Or if you have a question and you're not a client of the firm, you could just drop it in the comment section below and I'll do my best to get back to you. Before you worry about certain types of property and say, hey, I do have foreign property, should I be disclosing it? Note that the foreign property disclosure rules do not apply to foreign stocks owned inside of RSPs, inside of tax-free savings accounts, and it also doesn't include foreign stocks and bonds owned through Canadian investment vehicles. So if you own a Canadian mutual fund, a Canadian domiciled mutual fund that owns US or emerging market stocks in a non-registered account, you don't have to worry about this rule. This is just for the assets in non-registered accounts that are foreign property. Those are the things that you need to be watching out for. So, this may not apply to you, but I just wanted to make sure I touched on it because I do see it pop up from time to time. And there are penalties for not disclosing. So you want to be careful that you're not missing this item because it can trip you up. And then finally, my big encouragement, and a lot of people do forget to do this, is I encourage you to file on time. And I run across a lot of situations where someone they don't necessarily owe any taxes. They've been disclosing, they have been deducting taxes or taxes have been deducted and remitted on their behalf with their paychecks. And they may not actually owe any taxes. The deductions that are done at source actually do a pretty good job, but they still may have several years where they haven't submitted their tax returns. And this becomes problematic. The first big issue is that it actually is illegal to not file your taxes. We are obliged by law to report our income to the government every single year at tax time. But even if that doesn't kind of scare you towards filing your taxes on time, there are some real situations where that could come back and bite you. So the first is, if you do happen to owe taxes, let's say you don't think you owe any taxes, but you do, there are penalties assessed for not filing your taxes and paying your tax on time. The second thing, and this is a big deal for people that are retired, is that if you don't file your taxes on time, you may see a either stop or a pause in your entitlements. So I'm thinking of things like old age security, GIS if you're a low income senior. And it also may be a situation where you're not getting certain credits that you're entitled to, like the Canada Child Benefit if you have young children, or GST and HST credits. But the big thing that I see with high income individuals is that they don't file their taxes, but they're actually owed big refunds. And I kind of look at it and say, why not just file your taxes? You're giving the government this interest-free loan. They're holding back money that is yours. So, file your taxes on time. And then sort of the next one, I guess, is my real last one, is the longer that you delay getting your taxes in, if you have accrued years of not filing your taxes, like let's say you have 2, 3, 4 years of tax that you haven't yet filed, it just becomes very high, like a high risk situation for something being missing, for you forgetting something. And if the CRA comes back and challenges you on it, there's a good chance that if you've got 3, 4, or 5 years worth of returns that you haven't done, that your record keeping is not going to be great. And the CRA does compel us to keep records of our taxes and the things that we are claiming as deductions and credits for a number of years after the tax year in question. So just as a mechanism to make sure that you're staying on top of things, I think that getting your taxes done regularly and on time is always a good idea. For clients of the firm, I'm going to be sending you a tax checklist that has these items that I talked about today and a lot more detail on just things you need to be remembering when you're submitting your taxes to a tax preparer. For people that are watching this video that aren't clients of my firm, I'm going to put a link in the notes below that'll take you to my website, and I'll just post this checklist in the blog post that is going to go along with this video. So hope that you found this video helpful and interesting. If you like it, give it a thumbs up, and I will speak with you next time. Take care.